So as always, I'd like to start this presentation off by just introducing myself. My name is Sean Kozak. I am the CEO of TickBlaze. I'm Senior R&D Manager for all systems architecture and development. I build systems, I trade systems, I work with over 30 programmers across multiple companies, and I've been building trading systems since 2015. Built probably more apps in the industry than anyone in the industry. That is a fact. And what we're going to be doing today is we're going to be talking about what I think is probably my top three most important trading systems that every trader should understand. Top three is because it's not an automated system. This is a discretionary product, but there's nothing else like it in the entire world. In fact, there's a little bit of a backstory to this. We're going to get into that today, but don't worry, we are recording the event. We'll send it out to you guys. You guys can watch it and you guys can ask questions. If I don't get to those questions in the chat box, please type them and we'll go over the Q&A at the end of the presentation. There's a lot to unpack here, so I want to basically go to it in a quickly and timely manner, and then we'll spend some time. I took 2 trades today in the market to demonstrate the concepts, and both of them lined up specifically to where striker profiles presented great opportunities. But I want to share that with you once we go through the details. Okay, so first and foremost, whenever you hear the word institutional, I give you permission to run for the hills. Because anybody that's trying to sell you shit has no goddamn clue what the hell the institutions are doing. Okay. The only reason I put this in here is because, unlike other indicators and strategies, this took 4 years to architect, and we have a relationship with a data vendor of record who's built an internal database for options flow inside of the TickBlaze platform. Now, TickBlaze doesn't have an options chain yet. I say yet, because it's coming. But it has an institutional layer based on data. So we pull options data into the platform in a back-end data feed, and we fuel this software for all of the users using this tool. This took years because we couldn't build it on Ninja. It's impossible to build this on NinjaTrader. It's impossible to build this on any other platform unless those platforms create a partnership with a vendor of record to build an internal options database to be able to fuel the software the way it is. Okay. So there's a really, really big component to this that is proprietary to TickBlaze. Okay. Now we look at zero-DTE and weekly options data for this. And we're going to talk about this. It's for stocks and futures. Okay. The futures options chain and the stocks options chain fuel a lot of information that traders do not understand. Okay. Most people think what they're looking at is the underlying asset. So when you trade the S&P futures or when you trade stocks, what you don't realize is the options that are moving the market. Today, they kept the market at the high because the options market kept the market at the high. And we're going to talk about that today. Okay. So I'm excited because we've taken this information and we've put it into a tool set that's going to allow you to be able to see this locations on your chart. Now, I do need to cover a quick disclaimer. Please type a Y in the chat box that you accept and agree to this disclaimer. I want to make sure that you guys understand there is risks in this business, and I'm not here to give you any advice or promise you the heavens or anything of the trading is risky, and most of us will lose all of our money times 10 before we ever get there. Okay, so just know that. And please just make sure you understand the risks before you ever place capital in the real market. Knowing that past performance does not guarantee anything in the future. Okay. So there is nothing like this in the world. You can't buy this on TradingView. You can't get this on NinjaTrader. You can't get this on MetaTrader, CTrader. You can't get this on TradeSet. There is nothing like this tool ever built in any single trading platform. Why? Because it requires a data feed from the options chain. And it has to be built in a way that we take that data and we put it into this type of a product. I mean, it took years to build and develop. Okay. We actually pay for the data and then we provide it to all of the users using the software. Okay. Now, why is that important? Is that you do not need to buy an options data feed. That is a huge win. Normally, you'd be required to pay for options data to get options data. We do not require this. It is all built internally. Okay. We're going to talk about this. We're going to talk about something that I think everybody should know. Let me ask you an honest question, okay? Not a dishonest, an honest to God question. If I sat you down right now before you started trading this morning, and I said, "Listen, hey Joe, I'm going to just use everybody here's name is Joe. Hey Joe, um, I have a tool that's going to show you exactly where the banks are going to hedge their positions today, and they're going to control the market with a 99.9 degree of accuracy. Would you like to know where that information is? If I could tell you exactly where the S&P is going to stop today, exactly where the Nasdaq's going to go today, what if I told you that tool exists? You just need to understand how to read the data. Would that be of interest to you? Yes or no? That's what this software is designed to do. In a visual way, so that you never need to question it. No, this is not swing trend lines and freaking order blocks and support and resistance and a break and retest and a fair value gap and oh my God, we're in a range and we're not, none of that garbage. This is literally where the banks have to do business because these are options that are expiring today. These are levels from zero DTE options and weekly. So we have weekly levels. So this is something we added to the software after we built it a while back. Okay. Now, why is this important? This should be used on every single chart that you ever trade. Why do I say this? And why do I feel so strongly about it? Because this is not just a trading system. This is a trading system, but it is not just a trading system. It should be on every single chart that you ever look at because let's just get right down to it. You're not the market. Neither am I. You want to know who is? The big guys. And this information is what they are using to make their decisions because they are trading options. And they are using options to hedge their positions at a fundamental level. And when you look at zero DTE options or even weekly options, when they expire, guess what that means? The market has to move because those expirations and those hedges are going to create major moves in the market. And we're going to talk about this today. Okay. Now, most traders in here are going to trade for prop firms. Okay. I'm not going to read this. I don't like doing PowerPoints. I got to read a bunch of stuff. I'm just going to say it as it is. Most traders don't trade for their own accounts anymore because they don't have to. Prop firms exist, and this is why prop firms are there, is they're there to provide opportunity. They're there to find talent. They're there to generate an opportunity for traders, okay? And as you know, we own a prop firm as well, and we also work with many other prop firms, and the whole mindset of the trading industry has changed, which is actually for the better because traders don't need to sit there and worry about their own accounts and they can work for a prop firm, right? But what the hell is that any good if you're not succeeding as a prop trader, never mind your own account, right? Like if you're going to trade anything, you have to make a decision. What do I trade? Am I going to use an indicator? Am I going to use an algo? Am I going to use a tool? Am I going to use an oscillator? Am I going to use order flow, volume? Holy man, there's so much stuff, right? And trust me, we get it because we sell a lot of it. But let me explain something. Nothing replaces institutional information. I said this is the only time you're ever going to hear me use institutional in a presentation because I know where the data is coming from. Who do you think's trading the big options chains? Who do you think's putting on major options contracts on the S&P or the Nasdaq? Think it's the retail? Sure as hell ain't the retail. Yeah, retail ain't putting on 100 options contracts on that Nasdaq. Can you imagine the leverage on 100 lot options trade? Holy smokes. No wonder the market changes on a dime. Okay. Well, if you're going to be a trader in the retail game, I highly encourage that you take an internal reflection today after hearing this presentation and ask yourself an honest question. If I had one tool in the entire world that could tell me where the banks are going to make major decisions, wouldn't that be something that I should have? You tell me right now, yes or no. I haven't even shown you how to use it yet, but let me ask you a question. If you're going to trade in an institutional bank environment, you're trading in their industry. You're not trading in ours. You could take every single person in this webinar, including myself, and every person I know in the world, put them into a stadium, and we still don't have enough impact to do anything in the market. They do. And this software is going to tell you what they're doing. Now, I traded this. I know how to trade this. I'm not going to sit there and sell the sizzle. I'm going to show you today. I traded this. Doesn't matter what I did. It matters how I show you to use it. But this stuff works. This stuff really, 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 really works. And it doesn't need to be complicated. I'm going to show you how to do it. Okay. And let me tell you, I know a lot of traders that will never, ever, ever load a chart without this software ever again. Why? Because knowing so would be freaking scary. Can you imagine trading every day and not knowing what the banks are doing? I can't, because I know what they're doing. I can see it every day. I can see the major, major, major levels that they're going to make big decisions for. And that's important. Okay. So let's start with this. Every single one of these players, okay, is an institutional player. Warren Buffett, George Soros, Jim Simmons, Ray Dalio. And what's important here is that, you know, what happened when we built this software is I was on an airplane and I was reading the book Ray Dalio. And I read a chapter in his book called Principles. And what happened is that I read a line in this book that said, I run the most successful hedge fund in the industry, and I've never made a decision based off technical information. Every single decision that they've ever made as a fund has ever been fundamental. And when you look back at every single major bank or big institution, okay, is they all make decisions based off fundamental information. So you got to remember, they're not looking at what you're looking at. So whatever the banks are doing, it's completely not what you think it is. And so what we did was we went on a quest into the CME. Now you could go to the CME website and pull this graph. I don't know if you know where to look for it. Many of you won't. You could go down a rabbit hole. This chart exists on the CME's website. Okay. And this chart tells you exactly where the banks are going to keep the market this day with a 99.9% chance of certainty, because they have to reveal the options positions that they're expiring, which means everybody in the world that's moving big money around can go to the website or get whatever data they have. They have the same tools we have now, is that they are going to see this information. They say, oh, this is exactly what's happening today in the market. So they base all their fundamental decisions on this. Now, we only had this information for a very long time before we could actually build it into TickBlaze. Why? Because we tried to do this information on other platforms. And let me explain, it was not easy. Every day we would go in and we would grab this data and then we'd plot the lines on our charts, and it would take hours. It would take just so much hours of work. The levels are killer. Like, they just work extremely, extremely well. But how much time of your life do you want to go into researching the information, pulling the data, plotting it on your chart, then figuring out how am I going to take this trade? Is Jeffrey here? I think one of our instructors is here today, Jeff. I think
I was just going to jump in and tell you I'm the guy who used to plot all those levels. Believe me, he's right.
so. We did this manually. And let me explain that this is not something you want to have to do, because yes, it's important that you do it, but it's not something that anybody wants to live their life doing. And there's a big difference between open interest and gamma. And sure, there's a lot of tools out there that'll look at just gamma levels, and we do that. But there's a big difference between open interest and open interest on the gamma, and then closed executions on the gamma. And we're going to talk about how this all plays into our software versus what's available in the space. Now, we've taken this tool and we've built it so that you just have to load it on your chart with a click of a button. And then ultimately what ends up happening is you'll see where the banks are hedging their levels based off the options chain. Now, this is not something that you can do easily, manually. So what we would do in the past is we would take this information and we would actually draw them. And we would have no choice but to draw them. And the data mining around this was next to impossible to do. But we did it because we knew that it was the most powerful form of information that could be available to us as a retail trader. And so what we decided to do is we said, how do we build this? How do we take this, which is extremely the most important thing that you could ever possibly want to read as a trader? And how do we make it happen? Well, first we had to contact data vendors. We had to form a partnership. We had to build the databases inside of TickBlaze. Then we had to extract the data and normalize the data so that we could actually see the information on the charts. And that way retail traders could actually trade it. And so this is a great example of the difference. The chart on the left is us doing it manually. So let me grab this for a second. You can see can everybody see the chart on the left? The chart on the left is the old version of this. Okay. So what you do is you can see that, we would take all this information and we would look for key levels, the big bad boys. And as long as you knew what you could do with them, we would draw those on the chart. And then there's no lying what happens. Like this is banks. But let's face it, most traders in here are not going to be able to do that. It is not something that you're able to sustain. So instead, we spent years building a solution that takes all of this information and plots it like a volume profile, but it is not a volume profile. This is the options chain that is fueling zero-DTE and weekly open interest, gamma, and open interest on the gamma for puts and call support and resistance. And we have the ability to rank them from best to worst so that all you need to understand is which levels matter and everything else is completely noise. And I'm telling you, you put this on your chart, you'll never want to not trade with it, because what's going to happen is you're going to see where they're going to trade through it, you're going to see where they're going to take it, and they're going to stop as a wall. And today is a great example. Like the S&P, everybody thought the S&P was going to rip to the open on the upside. Our software told you to be scary of that. And what we're going to do is we're going to basically show you exactly how this can be traded. Okay. Now, I'm going to bypass this. Like, we're going to get into the software. You can take a screenshot of all this. This is just me talking. Here it is. So there's two types of tools that is going to be included in this. There's the levels, which is what you see here. And then there's the data box. I only ever use the levels. The data box is there as kind of like icing on the cake, so to speak. Okay. But the levels are what matter. And why? Because traders are visual. So nobody wants to sit there and read a bunch of numbers. Yes, the numbers tell you a story, but who the hell wants to read a bunch of numbers? I sure as hell don't. And we built it. But what the numbers are telling us is what this information is showing us. And so we're going to look at plus weekly, because that's been added. We're going to look at gamma. We're going to get histograms. We can change the view from stacked or split. There's a volatility dashboard. We can filter the levels from best to worst. We can look at strike prices for us gamma. We can look at open interest. And you do not need to buy the data for this. Let me repeat that. This is a huge win in and of itself. The data cost savings alone pays for the software over a certain period of time. So it's a win-win. Okay. Now, I want to show it to you. Like, I want to actually show you the trades. I want to show you how it can be traded, what it can be traded, what we're doing with it, how to trade it, why we're going to pick certain levels over the others, because that's what really matters. How many of you guys would like to just know exactly how to trade it? Information is power, but without use case, it's useless, right? You want to be able to say, okay, show me exactly how to trade this, right? Well, I'm going to show you the basic version, and then you can take it down whatever complex road you want to go, because I already know that I'm going to show you a winning approach to using this today. And then everybody's going to get it. And then you're going to put it on your charts, and then you're going to say, wow, look at this on this. And you're going to put it with this indicator. It doesn't matter, because this information doesn't care what you're already using. I don't care if you're using Renkos, minute, time, volume, Heikin-Ashi, you're using RSIs, if you're using stochastics, if you're using order flow, it doesn't matter because these levels are going to stop the market. The institutions who are making major options trades don't have a clue what you're doing on your charts. And that is very, very important to understand. So you see these levels here? Do you notice how this crude market stayed here, 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 pushed down, push, came here, came here, came here, came here. They're just staying here. If I draw that across the chart and I draw that across the chart, there's a reason this market stayed exactly where it did today. But this is this sticks out like a sore thumb. Look at this. This is a small level, a small level. This is a medium level. That's a whale level. And whale levels get whale reactions. Medium levels get medium reactions. Small levels get traded through. It's that simple. It's not a volume profile. Oh my God, high volume node, low volume node, all that stuff. That's just bull. Like just don't, it's not, it doesn't, if you're a volume profile trader, it doesn't matter. This is just going to be easier for you to see. This has nothing to do with high volume nodes or low volume nodes or market profile or VPOCs or none. It all has to do with what these levels are doing and what they're meant for. Remember, if I'm looking at a 0-DTE options chain on crude oil today, guess what that means? This information is because the option is expiring, which means when the market gets here, and if this is something that is important, guess what? The market's going to respond to that. It has to, because these are not technical levels. Let's revisit this. Earlier, I said Ray Dalio. Was anybody listening to what I said? What did I say about Ray Dalio? Did he trade technical or did he trade fundamental? Right? This is not a technical. Technical? No. Fundamental? Yes. This is fundamental, not technical. So imagine putting a fundamental tool that the banks have to use on every single chart that you trade. How many of you guys think that's powerful? Yes or no? To have the fundamental data of where the banks are hedging their options today. Okay. Take a look at this. Which level is the biggest level? This one. Where to get the reaction? That one. Chewed through all of that to stop on a dime. 1, 2, 3, 4, 5 5-minute candles. Just stop, dead stop. Like just like not even like trading through it. Just the market goes there. Why? Because yesterday, whoever was making decisions on the S&P said tomorrow's 0-DTE expiration. All of the positions in this market have to execute liquidity at those levels to execute the hedge or get out of those positions and roll them to a new options contract. That's important. That's extremely important. Great example. This was a great example. We had the options chain. The Russell's incredible. I'll give you an example. There's a few markets that are very thick and there's a few markets that are very thin. I can tell you right now that really, really like gold, the Russell, crude oil, the S&P, these are crazy powerful markets on this stuff. Like insanely. Most people say, oh, crude and gold is a difficult market. Yes, not for this, because it's such a thin market that the levels stand out like a sore thumb. So when you see it, it's like taking candy from a baby. It's like you don't even need to trade crude oil, but just have a chart of it and you have this software on it and just look at crude whenever it happens at these levels, participate. Because it's like it's easy. Like I don't like to use the word easy in trading because I know trading is freaking difficult. But this is actually easy when you see it on the Russell, crude oil, gold, etc. We're going to take a look at today on the gold trade. It's massive. Take a look at that. There's only a little level here and there's nothing here. There's nothing here. What happened? They came in, they push out. That's important. We'll talk about that. That's a gamma flip. Okay. And then basically push all the way down and it just stopped. Like it just stopped, right? So like I'm going to explain why this is important. Let's go into it. You guys want to see some examples? Let's take a look. I'm going to zoom in here, guys. Bear with me. Just going to pull up my charts. Okay. Okay. So today this is gold and this is the NASDAQ. So this is a 1 minute candle on a Heiken Ashi bar. I don't care if you're using Renkos. I don't care if you're using anything. Okay. So let's just open this up. This is the options dashboard. Okay. Very, 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 it's built directly in TickBlaze. So let me just explain something. This is not some indicator that you install or you import. It's actually a part of the platform. So when you're using it, there's this little icon up here. So let's just draw a little icon up here. It's a little box, right? It's got like a Rubik's cube there because this is where the smart traders go. They go to play the Rubik's cube. No jokes aside, guys. This is very powerful software. We're going to talk about this. So there's a drop down real quick and easy. There's a dashboard for visuals. We don't need to get into this, all just visuals, right? But then there's the zero DTE and weekly. I can easily just toggle between zero DTE, which is great for day traders. You want to know why zero DTE is great for day traders? Because the data is expiring the day you're trading. So zero DTE options expire 0 days to expiration, which means the levels that are big are extremely important. Like it's not about drawing lines on your chart. The banks have to hedge their positions off those levels today. This is a fundamental compass. And when you understand how to trade it, it becomes a weapon unmatched in your arsenal. I promise you, this is better than any piece of software that you've ever purchased in the history of your career and will purchase because it will take everything that you're doing and change it. Now, we can choose between volume, open interest on the gamma, and volume gamma. If I go to open interest on the gamma and I just hit OK, okay, take a look. So the open interest, if I switch between the open interest like that and open interest gamma, okay, you're going to see the story change because the options data is different. Open interest is open interest that is still open for business in the chain. Okay. And then open interest gamma, gamma is the expected rate of change of delta. And so why a lot of people don't look at just gamma on volume, they look at open interest on the gamma because open interest on the gamma is where the biggest moves are likely to happen. You can use open interest as well because they can give you a very, very good look, but open interest on the gamma can tend to be extremely powerful. Now, let me explain something happen here. Okay, now let me go through the settings and we'll just talk about this for a second because this is exciting. We can do normal mode or we can do stacked mode. What the stacked mode does, it just changes the visuals. So if I go here and I put stacked, it looks like this. You can see the ratio between the options chain. I just like to put it on normal. I mean, for me, I just keep things simple, right? I can change the levels. If I increase these numbers, I'll have more. If I decrease them, I'll have less. The smaller the number, the less levels, but they'll be more powerful, right? So if I go here and I put like, say, 10, right? And I do this here to 10. Okay. If I put that, you're going to have less levels, but they're going to be bigger levels. Does this make sense? Now, what's important here is you understand that there's a box down here called gamma flip. Everybody should always have the gamma flip on their chart. It's very important that you put the gamma flip on your chart. Okay. Gamma flip needs to be there. It's super critical. If you don't have the gamma flip, you're at a disadvantage. We'll talk about what the gamma flip. The gamma flip means where the options chain changes from buyers to sellers in open interest on the gamma. And why is that important? Is because normally it'll be a major, major, major trade every single day. Literally, I know traders that their only trade of their business is I only trade the gamma flip. It's a one trade a day per market. It's an incredible trade, and it happens like exceptionally well, exceptionally well. And so the other ones down here is put support and calls. A lot of traders get confused between puts and calls, because in options, you can be bullish and you can be bullish using puts and calls. And you could be bearish and you could be bearish using puts and calls. So what we do is we don't want you to go down that rabbit hole. We're not doing spreads or regular positions or condors or whatever the freaking butterflies you want to call it. None of that matters. All that matters is that you look at support and resistance. And even if you're above resistance, it's going to be support until you're below it. Remember, if you have call resistance and you're trading here, okay, and it drops, this will not be resistance until we get below it because of the hedge. So this is important, and we're going to talk about this here today. Okay, so let's take a look at this. You see this, the gamma flip? We never got to the gamma flip level today, the yellow level down here. We never did get to the gamma flip. Now, I want to talk a little bit about where these lines extended. Okay, on the chart, today off the open, I took this long here because, well, it was a great trade. It was a great, great trade. They came down, they pushed it down, they came right to the fundamental level, right? They swept liquidity off that level, but that is the fundamental level. And you come here, you're oversold in an oscillator, get some divergence, whatever else you want to call it whatever you want. They came down, but this level is a fundamental eye stopper. It just stands out. You can see it. Where did they take it right back to? They took it back to the second biggest level on the chart for the day. This is the two biggest levels. This is the biggest, and this is the second biggest level today on the chain. So what you do is you just take a look at that. You tell me what happened off those levels. Like if you just zoom out and I draw a line from here, that's the biggest level, and that's the biggest level for the day. It's just an RSI. There's no special hocus pocus here. This is just an RSI. I mean, this is just, you don't need special tools when you have Striker. Striker is everything, right? Let me explain this. Price came down, pushed down. EMAs were up all day. If this is going to drop, it's going to drop. And if it's going to bounce, it's going to bounce. What they do, they took it right back to the biggest Striker level of the day. They just played it from one level to the next, came back down. We got below it. What'd they do? They came back up to the resistance. Remember what I said? It's going to be support until we get below it and it becomes resistance. Does this make sense to you guys? It doesn't matter which bar you put on. You can put a Renko chart. These levels will be the same on every single chart. It doesn't matter if you're using a tick chart, a 15-minute, a 30-minute, an hourly, a 1-minute, a Renko, a range. Those levels will be the same on every single chart. And if you think about it, what happened? Got a trend cross with the EMAs. Just some freaking EMAs, guys. We're not using anything special like a 30, a 21 period EMA. Like the trend pushed down, big reaction. Trend changed, trend is down, resistance. Came back down, resistance. Huge trades off the Striker levels. Nothing else, nothing more. The biggest levels create the biggest trades. That's it. That's it. That's all. The morning is done. By that time, it's the morning's done. And that's Striker. Let's go back and take a look at gold. I did the same thing on gold. Literally off the open, just waited. Can everybody tell me which direction the EMAs are? Up. Okay. So could we not just buy the biggest Striker levels? Yeah, that's what they're doing. That's what they're telling you they're going to do until we get below this, which means the hedge will break and this will become big resistance. Remember, this is a hedge, which means they're going to defend it until they break below it, and then it's going to become the opposite side of the hedge, and it's going to be a huge trade. So let's explain it. Okay, let's talk about this. Market open here, came right down. They tapped it twice. I took the trade on the rotation, just waiting for the market to prove that it's holding, and took the rotation, just waiting for the EMAs to cross and rode it all the way back up to the highs. What'd they do? They came back down again. What are you seeing here? Defending the level. Defending the level. It's the biggest options chain today. That and this one. So if you look at the chain, you're not getting anything way down here to the gamma flip. So they're going to defend the biggest levels. And what they do? They kept it. They brought it all the way back up to this big level right here. This was the big level off the open. And it's the screaming. It's saying, this is where the banks are trading. You better be paying attention to it. That's all the software is designed to do. It's not designed to give you any fancy other things. It's not designed to tell you this signal, that signal. It's designed to tell you where the banks are hedging their positions, period. And what did they do? They took it all the way up to this massive level and this one up here. If they got through this level, which they couldn't, they would take it to this level. It's that simple. I can go into the software. I can change the numbers. I can switch this to open interest gamma. Take a look at that. This will change throughout the day every 15 minutes, mind you. This will change every 15 minutes. So the software will update based off rolling options in the 15-minute queue of data. So take a look at that. So this may have been the biggest in the morning. This basically became the biggest in the afternoon. So if you think about this, that's the gamma. Okay. So their market's stopping there. They rode it from one big level to the next. Does this make sense to you guys? Does everybody kind of understand the power of that? Like, this is not like me. This is not Sean's strategy. This is, we're pulling the information from the chain. And I can turn off the data labels so you don't have to see the data. You just do that. I can go in here and see what are the weekly expirations going to be. This is powerful for the rest of the trading week. Let's take a look at the weekly. That's a weekly chain. So this is the weekly options expiration. So let me explain key levels for the week. So if you're going to basically say, oh, what's going to happen Monday, Tuesday, Wednesday? Well, guess what? Friday's a holiday, or Thursday's a holiday because it's Christmas. Early trading on Wednesday. Okay. No, PK, you do not need to make a determination. Put some EMAs on your chart, trade in the direction of the trend, period. It's that simple, right? Like if you're going to just pick the levels, trade in the direction of the trend. That's just that simple. Like, you don't need to be fading these against the market. Like, big EMAs are going to tell you what the banks are doing, period. Right? And look at all the small noise. Like, this is a weekly level, so there's nothing happening here on the week. But this is a key level for the week. Okay? So look what happened. I'm going to draw this. Weekly options open in the overnight session. Level here, big levels. So if you just map out the biggest levels, you just draw them. You don't have to draw them. You can extend them, but we'll talk about this in a second. There it is. There it is. These are the biggest levels for gold this week. Like, if you're going to really understand what the banks are going to do, they're going to be doing at those levels for the week. Like, it's not some volume profile. This is an open hedge. They may not ever get here because they're purposely keeping the market down from here. If they get here, that's going to be huge resistance. You don't have to trade it as resistance. You can trade it as support as we break through it, or use this as a target. Now, I'm a day trader. I am not a swing trader. So I do not trade like that. I will go in and I will actually remove all these drawings. I'll turn this to 0-DTE and I will let it load. And there it is. So coming into the day, it's very simple. You can see the levels and they stick out like a sore thumb, right? If you look at what they did here, they come right from level to level, right? Now, on the NASDAQ, if you take a look at the NASDAQ, that's all they did today. They played the two biggest levels. Does everybody understand that? Like, you can change the software to do what you want, weekly or daily. It doesn't matter. If you're a swing trader, you use weekly options. If you're a day trader, use 0-DTE. And you can change the strength of this to, like, say 10. Say you want to do 10 levels. 10 levels. Just do that. It's going to give you less levels, but they're going to be the ones that matter. Take a look. There's no noise on this. Right? Let's go in and actually change this to RTY. Let's take a look at what they're doing. It's going to load the striker data. Okay, I'm going to change the settings a little bit because it's just a bit low for the Russell. All I do is ever change those numbers. I never change anything more of those numbers. Now, this might have been expired. So let's go here and let's go to open interest. It may have changed. It may have been different since this morning because the open interest changes. Right there it is. So there's the open interest, right? And the open interest on the markets with more of them. Let's continue up. Okay. This was the open today. That was the market open. What did they do on the market open? 7:30. There it was. This was the open right here. Push right up. What'd they do? They took it right to that level. And look at that. 1, 2, 3, just drop, right? And we get above it. Okay. We never even came back to test it, right? We just cruised through that. But that was a huge short if you're a counter trend trader off the open, right? The second biggest option level when we were above it is here. So let's just draw them. 1, 2, 3, 4. So let's just, these would have been here in the overnight session. So let's just take a look at this. Look at the gamma flip. So one thing you want to understand about the gamma flip is this yellow dotted line. And whenever we're on the gamma flip, it is an incredible trade. Take the gift. When you're on the gamma flip and we get above it, you should be buying the retest of the gamma flip. If you're below it, you should be selling the retest of the gamma flip. It's a huge trade opportunity. Most traders are going to wait for overnight sessions to finish. You want to test it on high volume trading times. Take a look what happens. They go all the way up. What do? They take it right to that level, drop it down. Okay. This is the level here. They take it right up, drop it down. Okay. Let's take a look at the ES. Gamma flip is the difference between the puts and calls in the options chain, Dan. So let's take a look at this. Let's let the load. So let's go in here and change this. So this was the S&P off the open today. Let's take a look at the open here. Let's go in and change this. So this is open interest on the gamma. Let's take a look at it. It might have been different this morning. There it is. Open interest on the gamma. Take a look. Okay, so if we're coming down here today, this is the S&P off the open. Okay, the S&P came right up to that level. Like they just stopped it on that level. Do you see this? This isn't some accident that the market stopped there. This isn't some resistance. This isn't some failed opening range breakout. This isn't some one and done that didn't work. This is options levels working at its finest. Okay, what they did was they kept it there. And then once we got above it, they came down to test that level right here. And they came straight up to the next biggest level. You can see how they react from each level. They just go right to a level, right to a level. This is on purpose. This option is expiring today. This chain is expiring. And so when you think about what it's doing, if you just draw a line across the sand on the biggest trade, this was the biggest level today. What'd they do? They hit it from resistance. They tried to test it here. They came back and they tested it there. And huge reactions, because the banks are using this as their hedge. This is not an indicator. This is a fundamental piece of information that has been turned into a line on your chart by us. And it is reading the options chain. Does that make sense to you guys? It's pretty powerful information. And one of the things that I really love about these levels, okay, and this is something that I started really watching myself, is that whenever I get to a level and I have divergence on a trade, I love it. Like if I've got divergence on a level, that is holy shit. Like, let's go. Like it's a big trade, guys. It's a big trade. right? If you can time divergence with these levels, yeah, you're going to be in a really, really good spot. Like you're going to be doing something big. So take a look at this because it's really about understanding the power of this. If I can see that we're making higher highs and I got any oscillator, I don't care if you put an RSI, a stochastics, an MFI, a MACD, it don't freaking matter. But when you combine these levels with some type of divergence, game freaking over. What did I do today? I did the exact same thing. I looked at the chart. I didn't do anything fancy. I plotted the options chain on the chart. Let's wait for it. What do you see? I had a lower low in price. I had a higher low in momentum. We're on the level. I waited for the rotation. I just bought as soon as the EMA crossed. Rode it all the way up to the next level. That's it, guys. Like these are really, really, really great, low risk, high probability, clean trades. And it's not hard. Now you might have some other fancy way of skinning a cat. You put these levels on your chart. If you're a support and resistance trader, you're a trend trader, anytime you're at these levels, you better believe you're going to expect big movement. Extremely powerful movement. Okay. Take a look. You get up, right? Take a look what's happening here. You get up to these levels, okay? You get divergence, right? Now, I would not trade gold past this time. Like I would not trade gold in the afternoon. So the trade is in the morning. Like you got to be up. If you want to take good trades on gold, you got to be up for that, right? Not everybody trades gold. Most traders trade the NQ and the S&P. 80%, 90% of our volume comes from the S&P and the NASDAQ, right? But if you are somebody that's Johnny on it, early bird gets the worm, you can come up and trade gold in the morning. You can get some really, really killer trades, right? Really, really killer trades, okay? So how many of you guys can see the power in this? Give me a yes that you learned something from this. You found this informative. You know, this is kind of like a breath of new air, so to speak. I promise you that if you're going to trade, and I don't care what you're using, I'm going to keep saying this over and over and over again, is that you only need to see where they're making decisions and be on the right side of it. Does this make sense to you? Right? Does this make sense to you? You do not need to be right about all the levels and drawing and this and that and all that. You just need, and this works on stocks and futures, right? We can do it on the spiders. We can do it if you want to trade options on your portfolio account. You could do the QQQs. You could do these types of things, right? Like there's no question about it. You can do that. We have an entire list of majors, Apple, Amazon. You could do that. If you want to trade stocks on this, you can just definitely put that in on the chart and load it, right? Does that make sense to you guys? Perfect. I'm going to just bring this back down, guys, so you guys can see it. So let's talk about how much it's costing. Merry Christmas, ho, ho, ho. I'm the big fat guy jumping down the chimney. We're going to give incredibly discounted price points. You guys okay going over pricing so we can discuss how to get the software, how to use it, what it is, what comes with it, setup, training, all that stuff? I just like to get right into it, guys. Like there's no hidden agenda here. This tool costs money, and we're going to give it to you for a stupid discount. Stupid, stupid discount. So normally we charge $49.75 for this because of the options chain inside of it. There's an options data feed we have to basically pay for all of the users. What we're doing is we're discounting you $4,525. $450 for the software. This is a Christmas discount, guys. This is only for now. Okay. If you already own it, you don't need to buy it, Sally. You already own it. Okay. So we're doing a Christmas deal, right? You will never see that. It is insane. We're doing this for the holidays. I truly believe everybody in the industry should have this software, and is only available for the next 24 hours. Okay. Now, it comes with the software. It's a one-time fee. You do not need to resubscribe to it. We have major documentation and we have cheat sheets and we have videos on this. We have everything. You can get the desktops from our trade room instructors. Jeff can provide you with his resources and all of that. We have some chart templates and all of that stuff. We have recorded training that we've done, exceptionally detailed training on this. And then we have the data feed, which you do not need to pay for. So let me explain the power of this. You can subscribe to options data, and that covers in like 2 months. I don't even know if, like, I think options data is even more expensive depending on what classification of trader you are. It's a nightmare if you have to go and buy this data and do that, and we do it all for you. You do not need to do anything. Okay. So I just want to let you know that it's a huge advantage. It's a huge opportunity. I'm going to put a poll in here, guys, and then we're going to open it up for questions. Okay. So I just want to know if you're looking to purchase the software, I'm going to have our team uh, follow up with you if you need assistance. Can you guys just do me a favor? Because we want to send out the coupons and the discounts. There's no coupons. It's just, I think there's no coupon. I think the link's been set up for this. I'm going to put it in the chat box. So please put a yes in the chat box if you are looking to purchase the software. We need to know because we're going to send some specific emails to you based off the poll responses. So we would like to always just make sure. Okay. This is an incredibly deep discount, guys. Take advantage of the mulligan when you get it. This software. No, TickBlaze is free, Frank. Yeah, you do not need to pay for TickBlaze. Yeah. TickBlaze is a free platform. We license it to prop firms and brokers, and yeah. So please do me a favor. If you have questions, type it in the chat box or inside of the questions there. You can put your phone number. Jeffrey will follow up with you. Jeff, can you just address the area code and everything you normally do?
Yep. After Sean is finished, I'll call back anyone that has any questions. Look for a 708 area code. That'll be me.
Great. So please type it in the chat in the poll, guys. We always offer these discounts to try to help everybody, right? And yeah, Dale says I need to watch this again to lock in how cool this is. Yeah, this is well, there's many ways to trade it. I know that Jeffrey trades it his way using Renkos. Many traders use it different ways. If you're looking to, take a couple big trades every day, you're going to get the bigger trades off these levels. It's clean, it's easy, it's super powerful, guys. There's a big difference between building an indicator and pulling fundamental data from institutional options. Like that. It's not even the same discussion, right? Like there's no discussion there, right? Yeah. Hey, thanks, Bradley. Yeah. Merry Christmas to you guys too. It does not place the trade for you. This is not an algo. You do not need live data. It already has it inside of it, Alexis. The only time you need data is if you want to trade real time. So if you're trading futures from a prop firm or if you're trading equities, if you need stock data, you need to buy data feed through our data vendors. But if you're trading futures through a prop firm, it's already part of your package with them. You don't even need an options data feed. It's already part of this. Yeah, this requires options data, and we pay for it as a part of the package for the platform. So it's all included. You do not need to buy options data. Make sense? It does not come with any other partner. No, this is built into the platform. This is an app in the marketplace. Yeah. Yeah. Great, guys. Uh, it runs every 15-minute rotations. Options don't operate very fast, right? Like most options chains are not updating of any meaningful context in like minute feeds. If every 15 minute the option rotates. Great. Perfect. Did you guys enjoy that type of yes if you enjoyed it, right? Yeah, we got a bunch of order flow algos coming. The levels will update actually the actual levels update minute by minute because we have a rolling 15-minute feed. So what happens is what happened every 15 minutes, every minute after it's going to be updating. Yeah. It's just the options change it changes 15 minutes, but it basically yeah, it basically rolls every minute after the 15-minute mark. Yeah. I'm going to post this again here, guys, for you. Here's the No problem, Paul. Not a problem. Yeah, if you just put your phone number in the poll and just put your phone number there, and yeah, you can do that, or put your email in. Not a problem. Pablo says I just purchased it. No problem. Yeah. Any issues with purchasing or anything like that, just send an email in. Our team will help you. You know, we're here to help, right? I want to go in and actually just take a look at another market. I know I get so excited about this stuff because it's just I know what it's doing, right? I know. Let's just take a look at CL. Let's take a look at crude today. Crude is a killer market for this. I just want to see what crude's doing. Interesting. Maybe it's because the market closed. Yeah, it's because crude closed already. Let's do the weekly. Let's put on a weekly. See if the weekly. Yeah. There's the weekly. So obviously the daily will open up once the pit opens again. But like take a look at the weekly option. Like that's a weekly level. Okay. So like that's some pretty powerful information. And take a look at the two biggest, like the three biggest levels here. So let's just draw a box around these three biggest levels. I can't deny that. Like it's okay. So let's just do this. This is the weeklies because the dailies are expired already for the day. And like you can see that this is the put call ratio level here. So I'm just going to make it a little bit less. Let's make it like this so you guys can see it. I like to just draw it like that. So I keep it exact. Okay. And you can see right down here, these three levels were the biggest bad boys of the day of the chain. So when you look at how the market responds to these, okay, if you're a directional trader, okay, you're not fading this to the short side. You're taking a long position here. You're not fading this here. You're not fading this here. You're taking a long position here or waiting for the rotation. And so isn't this like impulse pullback, impulse pullback? Yeah, that's why the market's pulling back to those areas. Okay. So when you start looking at a bigger time frame or you start seeing these information points, you can start understanding like why did the market stop here today? Like it came right down within this area, right? And that's important. Now I might increase this just a little bit. Let's take a look at open interest. Yeah, open interest a little less. Let's take a look at open interest on the gamma. I'm going to just put this to like 40, give you a bit more levels. Yeah, there they are. Yeah. And you can see that you can draw these. What's unique about crude oil is that crude oil, one of the things I like about crude oil for this software is that it runs on like 50-cent increments, like 57.50, 57.75, 58, 58.25, in 25-cent increments. Crude runs in quarter increments. And so when you understand your market and you start looking at, okay, like everybody says, oh, it's a round number. Well, it's only a valid round number if it's a big level. It's 58. Yeah, it's a big level. So they took it from 57 to 58, not by accident, guys. This is not by accident. I promise you this, if you understand the power of what level to level means in the options, right? Like these are weekly levels. Look at 60. Okay, so let me explain this. If we get above 57 or 58 today or tomorrow or whatever, okay, and you look at this on the week, and if we get above here and we come back at 58 and they rotate off this, they're going to 60. That is a fundamental magnet. It's going to act like a magnet and that's going to rip to 60. This isn't some guessing game. This is what has to happen based off the options data. Does everybody understand this? Like that is the weekly option. And unless this changes because the options changes, I would highly encourage everybody to be paying attention to what happens off this level and going to this level this week for crude. If you're a crude trader, right? Maybe you're not a crude trader. Maybe you're an S&P trader. Same thing. Make sense, guys? I'm just giving you guys golden nuggets that I've spent years looking at. Is it better to look at open interest or open interest gamma? That's a great question, Oscar. Um, it really depends. I think one of the things that I like to look at is open interest on the gamma as an intraday trader, but sometimes open interest will stay there longer. So open interest will stay on the chart longer because they may have open interest on the contract. Open interest gamma will tell you where the bigger squeezes are going to be. Yeah. So if I look at open interest gamma, it's going to tell me where the bigger levels are going to be. And as a day trader, that's going to be where the big moves happen. Right. So what I would do is I would watch this rotation. You see here? See how we got below it? That's resistance. So I would not be trying to fade it here. I would be buying it as support. Okay. And then I would be fading it as resistance. There's only two trades on this. So if I draw this line like this, okay, this is critical. Okay, if I'm watching like this and it's the hard right edge, okay, and I'm watching it, it's going up, going up, going up, going up, going up, going up. I would not fade this. I would not fade this on a reversal. Yes, we might get a reaction. And wow, God forbid you get a reaction. Okay. You don't know that. You don't know if it's going to blow right through it or not. But as a directional trader, you want to wait for it to get above it and then come back down and trade it to the long side. Okay. And then as you get back below this on the trend, okay, the trend crossed here. Take a look. There's these EMA crosses. If you guys want my EMAs, just take a picture. I've got for the big ones is 55, 89, 144. 55, 89, 144. So, you don't really need to have the 144 on here. I just do just for my own guidance, like just the big picture. But like if you take a look, I just look at the immediate trend and I can see right now, right, the trend crossed right here. That's a 55 period and an 89 period, which is a pretty substantial period for a trend change, right? And so when you get an opportunity, look at that short. Like that's a crazy clean short off that level. So it's really about just understanding, do you want to be a buyer? Do you want to be a seller of these? It just depends on your perspective. Some traders like to fade for quick scalps on the reversals. Some traders are more willing to wait. I like trading it with divergence. I think it's a really, really sexy tool with divergence, high probability. Yeah. Does that make sense, guys? Lots of information to unpack here, right? But take a look. Take a look at the NASDAQ here. Okay, so let's just talk about this. I can't stress enough. Trend change here. Okay. Trend change there. So this rotation caused that trend to change. That's why it didn't give me my full target up here. The trend changed here. So this became a great short to write it back down, or this became a better short, write it back down. Really, really key.
Hey, Sean,
Mhm.
one important feature, a lot of these traders are using micros. You can map the mini levels onto the micro charts.
Mhm. It's symbol mapping. Yeah. So if you're trading micros, you can just map the micros. So what that means is that the data is most powerful from the mini, right? That's the big boy contracts, right? Not big banks are not using options on micros. They're using it on the minis. So what that means is if you're using a micro, great, you can pull the data from the mini and you can feed it to your micro contract, which is incredible. That's a win right there, guys. That's a huge, powerful win because now you don't have to learn, you don't have to trade the full size contracts. You can trade the micros. Make sense? So good call on that, Jeff. Yeah, thanks. Yeah, very cool. Uh, yeah, stop placement and target placement. That's not for me to tell you that, Brian. I mean, I'm not managing your account, but what I can tell you is that, normally if you're going to trade volatility driven bars like time or volume or tick, I would use a volatility based stop. I would not be using just random stops. For myself, you guys want to know how I place my stops? So if I'm trading this level, right? If I'm trading a level like this and I'm going level to level, if the trend is going to continue there, then I'm going to try to take out that higher. This is a 1 minute chart. So if you think about that could just be, you know, a very deep pullback for us to try to attack the high. So normally when I do these types of things, I don't like a tight stop. So I will basically come in here and I will ultimately take my risk reward tool and I will get in on the rotation and I will do a 1-to-1 to the highs. So that allows me to have I can peel out at a point 0.5, which is what I did. I got a little late entry there, so I mean I was right. I had it like that. That was the way it was. So I just like to give it room, right? I like to give it room and I like to let the trade breathe a bit. And you don't need to use Heiken Ash, you use Renko, whatever you want, right? But if I was to take the short here, right, from this level, and I was to plan the short, then I would ultimately go down and I would say, okay, I'm going to take the short. I'll wait for the crossover. I would basically have my stop like that. That would be my trade because I want to have my 1-to-1 target to the lows, right? Yeah, so everybody has to pay an annual maintenance fee, Abby. So great question. So the marketplace is based off of products. There's dozens and dozens of products. Many traders buy multiple products in the marketplace. We don't charge a maintenance fee for each product like many other companies. If you've already paid for it, yeah, then you're not paying for it twice. Yeah, it shouldn't be added twice. Yeah. Yeah, and it has nothing to do with TickBlaze. Yeah, the marketplace has nothing to do with TickBlaze. It has to do with the marketplace. It's a maintenance fee for all the apps. Yeah. Check in email support. If you can't check in, Abby, just email support or get Jeff or one of the guys to help you. We'll take care of you. Yeah. So essentially that would be the trade, right? Like I would look to ride that down and do that. If I was looking to take this short, right? And I was looking to take that short and I didn't have a low, what I would do is I would basically put my first target to the low, and then that way I have at least some guidepost for that, and I would take the short. And I like to give my trade room to breathe, depending on the bars that I'm trading, right? It depends on the type of chart that you're trading. It depends. Like if you're trading a small time frame, you might place your stops and targets differently. Does that make sense? Like for gold, that's exactly what I did here, but I got both targets on gold. So like for gold this morning, right? You can see I took the trade off the level. So you can see there's a clear high in an uptrend. EMAs are respecting, everything's moving in the right direction. So I just basically take my risk reward tool. I wait for the cross. I put my target here. I think it was right there, just like that. That was how I traded it. Yeah. I like to look at gold at the 820 open Eastern. So 820 to 835 is the cash balancing open plus the pit open. So there's two opens on gold. There's an 820 open and there's an 830 open. You're normally going to get a big push on both of them depending on the day. So obviously, and then the 930 push is the 930 push. So if you look, I'm on Pacific time. So this was the open right here. Boom. And take a look. Came right down. That was a clean level here. Boom. No divergence, but all oversold, right? Oversold. And so I would enter right on this candle here. I would wait for the close above and I would take that trade. And so based on that rotation, what I would do is I would come in and I would wait for the candle close. And I would if I don't have enough room to encapsulate my stop loss like that. So let me explain this. So like if I can't get my target, then I will put my first target at the highs. That'll be my first target. Make sense? And then I will basically wait to ride that out. Yeah. Big levels. Mhm. The 1 minute rotation trades, these are 1 minute rotation trades. You're going to get maybe one or two a day per market. These are not scalps. These are day trades. Yeah, these are rotation trades. Yeah. Yeah, you have an annual fee and it's due at the next year. That fee is the maintenance on the software. So if you end up buying one app or 20, it's still the same, right? Let me just repeat that, guys. The marketplace has an app store annual maintenance fee on all apps. Most traders buy 2 to 3 apps per year. And so we don't charge per app. We charge an annual fee for the actual store. So that allows our team to keep the development up to speed, platform changes, app changes, bug fixes, everything. And it's a flat fee every year. Yeah. And you don't have to pay now, it's due next year. Yeah. Yeah. All right, traders. So listen, I'm going to sign off, guys. I want to thank you for your attention. Hopefully, you guys you learned something from that, and hope you guys found value in that. Hopefully, you guys had a great time learning about options levels. Here's the members area link again. Have a Merry Christmas, everybody, and hopefully, Santa's good for you. Make sure you check in the list, checking it twice, and don't forget to put milk out for the cookies. The fat man likes his cookies. All right, traders. Fantastic. Hope you guys enjoyed the event and lots of engagement here. Perfect. So, Jeff, there's a lot of traders going to expect you guys to get in touch. And for everybody that said yes, watch for your emails. We'll send out a recording. And I want to thank you guys from my family to yours and from our teams to yours. Take care, traders, and have a Merry Christmas. Bye for now.